there's a lot of things to talk about with you in terms of the skepticism now around the AI trade, skepticism around Bitcoin. Are they, in fact, related, do you think?
Related, but not related.
Yeah.
You know, I think the AI trade, I mean, it's been a juggernaut, and we know that the visibility for the next few years is really good. But now investors are just trying to figure out how much to discount, you know, what's the appropriate price to put. And that could drive some profit taking because they've done so well this year.
In his latest CNBC interview, Fundstrat CIO Tom Lee breaks down Bitcoin, crypto, and the markets. He explains that while both AI and crypto have strong long-term potential, investors are pausing to assess valuations after massive growth. For crypto, favorable U.S. legislation and growing Wall Street interest set the stage for expansion. Yet only a fraction of potential Bitcoin investors are participating today. Tom Lee highlights that the best years for Bitcoin are still ahead, given the vast untapped market. On AI, he notes we're in the bleeding edge phase. Technology outpaces practical applications. But the market could become multi-trillion-dollar as AI supercharges productivity. He also sees tech-forward banks like JP Morgan as undervalued opportunities, bridging finance and technology. Lee's key takeaway: both Bitcoin and AI remain transformative, but growth trajectories will require patience and strategic insight. Let's get more from Tom Lee's interview with CNBC.
On the crypto side, I think that there has been some concerns about quantum, and then there was that huge deleveraging event on October 10th. But the crypto fundamental story, I mean, is exiting on a really high note this year. You know, the U.S. government passed legislation and regulations favorable for crypto, and we know Wall Street has expressed a lot of interest in building products on the blockchain. So it's almost like they both have great visibility, but the price levels are just what's being uncertain.
I feel like what's common, though, with both of these stories, though, Tom, is investors questioning the growth, the trajectory of growth going forward for both of these stories. Not to say that things will contract, but maybe growth won't be as strong as we've seen. We've hit the peak sort of growth rates in terms of the story. The maximum bullishness happened with Bitcoin when the administration came on board and things started to sort of go Bitcoin's way. Maybe that was peak sort of trajectory higher when it comes to growth. Same thing with AI. Now it's a period where you're sort of wondering, will this actually get funded after we saw this massive expansion?
Yeah. Well, in crypto, the best years are definitely ahead, because today there's only 4 million Bitcoin wallets with $10,000 in it. There's 900 million IRA and brokerage accounts globally that have $10,000. So that's 200 times larger market. With regard to AI, I do think that the business models need to evolve. You know, you can't just charge $20 a month. I mean, really AI, agentic services, but the market ends up being huge, because in the US, it's really making 130 million existing workers into super workers. I mean, that's a several $1 trillion market just in the US alone. So I think there's still opportunities.
When do you think that we're getting point on that front? And I think arguably you're seeing it a little bit maybe on the margins right now. But do you see a step change 18 months out from now? Is that 5 years out from now? It's because there's also questions, by the way, about some of these services and how valuable they are to people right now. And I know some CTOs and others who are actually saying, you know, we're actually not getting the value out of some of these products that we were hoping to.
Yeah, I think we're in what I'd call the bleeding edge phase, like where everything feels like the tech is in front of the applications. That happened in mobile, which I studied for 17 years, and in internet early days. You know, like when color phones first came out on mobile, or even keyboards, people kind of sneered and said, you know, who's going to be using a color screen? And remember famously what happened when the iPhone was launched, and how one of the biggest competitors dismissed it and saying it's just a toy.
Right.
I think we're at that phase with AI where the capabilities will blossom and then services will follow. But that, as you know, the future happens faster than many expect.
So if the business models of these players, which people commonly call the Mag 7 in general, need to change, then what does that do to the valuation? Are we rethinking the valuation? Because, I mean, one distinct change has definitely already happened, and that is asset light to asset heavy, asset spending on assets continues, et cetera. Is that reflected already, or does there need to be further adjustment?
I believe that AI stocks, especially stocks like NVIDIA, are going to actually re-rate higher. Because if Walmart and Costco trade at 37 to 45 times earnings because they're predictable, then NVIDIA shouldn't be 27 times. I also think the banks are really criminally undervalued right now, like a JP Morgan, because that's becoming a technology company. And in the past, people are stuck in the head that it should trade at 1 times book or 10 times earnings. I mean, they should trade more like a tech stock. So I think tech and financials. Do you think that
of all the banks? Or do you I mean, JP Morgan in particular is invested obviously heavily in tech. But if I said JP Morgan and then I mentioned a bank 10 rungs down, would you say the same thing?
Well, it depends on how sort of evangelized a bank is towards adopting AI and being tech forward.
So, okay, on this screen right here, like is Wells Fargo on your list of tech forward banks?
Possibly. Goldman certainly is, and I think Morgan Stanley has shown a lot of evidence. So I think banks are sort of getting it, but they are really becoming technology companies.
So even at record highs?
Even at record highs.
Banks.
You know, as many technical strategists will tell you, it's actually sometimes better to buy things at all-time highs.
True.
Not always, though.
For 2026, though, you're bullish over all the markets, and it sounds like you believe in a broadening, but not necessarily a decline in the AI trade. That's
right. I mean, I think 2026 could look like this year, because this year had a bear market and then a bull market. Next year, there was 2 puts. There's the White House put still in play, and the Fed put, I think, is going to come back. People have sort of forgot, like it's been dead for 3 years. It's really going to come back in force. But it will take maybe the first half of the year to get through that, because we don't have a new Fed in the first half. So I think the first half next year could be down 10 to 15%, and then a big recovery.
The White House put is what? Further stimulus? The tax refunds that are coming? I mean,
yeah, it's pro-business regulation. It's really allowing, the U.S. to step away, look at how they're trying to simplify even AI regulations and rulings. And then it's, of course, legislation passing. And then we have the midterms, which gridlock is kind of good for markets. So I think tailwinds develop in the second half.
Gridlock because you suspect that Democrats win the
Yes, it's probably expected that they gain in the House.
And therefore, so therefore you think gridlock will be good for the
markets,
second half of the...
Yeah, I would say half of the equity investors I talk to will breathe a sigh of relief if there's gridlock.
And then one last question on Bitcoin for 2026, or crypto in general. If MSCI decides to exclude digital asset treasury companies like a strategy or yours, for instance, what happens to sentiment? What happens to this trade?
Well, MSCI is important because other indices follow suit. MicroStrategy is building a digital credit company, so I think investors will still support their efforts. But of course, I think they can be very persuasive. But the DAT world has many companies. A company like Bitmine is already becoming more of a bridge to Wall Street and investing in DeFi, so it's becoming more of a financial infrastructure company. I think DATs are going to be more of a generic word like REITs next year.
So it doesn't matter, is what you're saying, the MSCI decision.
It's right. And right now, the only MSCI sort of dependent company is MicroStrategy, because everyone else is not even in an MSCI index.
Tom, thanks.
Thanks. Nice to see you.
Tom.
Yeah,
Happy holidays. We don't see you earlier than that, but hopefully we will. And I like your green tie, which is very festive.